This is part 2 of my video for 29th of September 2019. First video I looked at the Forex markets, now I'm going to look at the stock markets, which are getting quite interesting actually. This is the DAX December futures chart, weekly chart. As you can see, nice bull trend going back to 2009, of course we all know about that. Now more recently, it's getting quite interesting. You see how the blue line, the 100-week moving average, has really worked quite well as a support and resistance line. It usually does, so it's no surprise. We tried to push above it recently in September, but we haven't managed. Well, we have managed to sustain it. We just bounced off there again. So at the moment, this looks okay, but we're battling with a trend line going back about a year and a half. So the key levels for the DAX futures at the moment are around sort of 12.5, 25, 12.5, 35, and then on the downside support around the 12, call it 12.150 area, which certainly worked, seemed to hold. We just blipped a little bit below there. We break up through sort of 12,600, that's going to look pretty positive. We break down below 12,100, that's going to look pretty negative. So those are the levels to watch for this week at least. But you can see we are forming a triangle, or we have formed a triangle on the weekly chart with a trend line down here at 11,490. So we stop. By the time we get there, if we get there, the 200-week moving average will have converged with that rising trend line. So that could be quite interesting around 11,600. We're way off there, so I'll have to examine that in the weeks ahead. The Dow Jones chart is more worrying. We've got a good trend line going back almost 2 years to the beginning of 2019. You can see that that's held very nicely in recent months when it's been tested and we've turned around. We don't have a big negative candle on the weekly chart, but still, the trend line is holding. Let me just have a look at the monthly chart because we're a day off the end of the month. So no, the monthly candle isn't particularly negative either. We'd really have to close down. We'd have to drop 500 points or so, 400 or 500 points on Monday for this to be more of a negative candle. But it's worth paying attention to the fact that we are holding this trend line. So as long as we hold below 27,400, this is quite negative. Who knows? We could test this blue 100-week moving average down at around 25,340. It's rising, so by the time we get there, it'll be a little bit higher. But you can see it worked quite well. Well, it's worked perfectly as support earlier in the year. So this would be the big test on the weekly chart, at least. In the shorter term, on the daily chart, you can see it's rejecting that trend line, heading back towards 55-day moving average. More importantly, we've got the 100-day moving average at around 26,400. So it's entirely possible that we could test that this week. A little bit of a trend line down here as well at 26,250. So that area would be the main support for the week in the Emini Dow Jones futures. Not a surprise to see a similar picture for the E-mini S&P futures. Again, that trend line going back to the beginning of February. We held it twice in recent months when tested in July and then again in September. We double topped is what I'm trying to say. We double topped when we tested it again this month in September. So we've got double top risk. We've got rejection of that longer term trend line. More of a negative candle here, the big red body candle. So this is looking a little bit difficult for stock markets at the moment, and I would not rule out again a test of the 100-week moving average, which will be at around, well, certainly above 2,800 by the time we get there. We'll obviously be looking at that on the way down, but it's certainly possible. Bulls are going to need this well up through 30.50 if they want to regain control of this market. So for me, I do see risks to the downside in the stock market at the moment. Now, the Emini Nasdaq also in a nice bull trend, but again, potential negative signals here. I don't know if you can see this clearly on the weekly chart, but we have potentially a left shoulder, head, right shoulder situation going on here. So a possible head and shoulders topping pattern going on. And it's quite significant because it's built up over several months. So if it does complete, this would be quite an important sell signal. We've got a neckline on the weekly chart down at around 74.60. It's rising, of course, so by the time we get there, it'll be a little bit more towards 7,400. I'm showing it on the daily chart. It might be a bit more confusing for you on the daily chart because I've got a lot of lines going on here, but this would be the left shoulder, this would be the head, this would be the right shoulder. You can see this trend line here indicates just the short-term channel, uptrend line there, uptrend line there. So in this channel, at least, we're still in a bull trend. The 100-day moving average is doing its job of support nicely. That's just about held this week. We overran a little bit, but managed to close above it. So some support going on there. Bulls are not going to throw in the towel and just let the bears collapse this market for sure. We could trade sideways. We could even trade within this channel. You see this trend line up here. We could trade within this channel for a little while longer before a breakout. So bulls are going to need to get us through at least 79.60. Bears are going to want to see us down through 7600. The neckline to the head and shoulders is down here at 70, as I said, well, it'll be around 7500 by the time we get there probably. And that will tie in quite nicely with Fibonacci levels that I've got here around 75.25, 75.05. So there will be a lot going on around that 7500 area. So therefore, a break below 7500 really would be very significant. We'll re-examine that in a week or two and see if we get down there and test it. The next point to watch will be the 200-day moving average, which is currently around 73.80. So a break below there would again be another very negative signal. I'm not saying it will happen, but it certainly could do, so keep an eye on it. Selling it right now is a bit of a risk. It's much more sensible to wait for the actual signal. This could just be a consolidation pattern, and we could just trade sideways for an indefinite period, so being short would be rather painful through that. I don't offer free trials much because I do post all our trades on Twitter, Facebook and across social media, so I don't offer free trials as well. Our work is there for anyone to see. But if you, I am actually offering a free trial now, only one of the year. So if you go to daytradeideas.co.uk/contacts, contact us page, you can use this email address to email me, ask for a free 2-week trial, and I'll give you that immediately. If you want to subscribe, then just go to our homepage and you can subscribe to individual reports, or we've got a premium subscription which will give you access to everything all in one go, emailed to you every day with a spreadsheet of trades which looks something like this. If it'll load, there you go. I set things out very clearly with trade levels, stops, targets, comments and everything else. So it's really, the whole service is done for you. You wouldn't really need to do your own analysis at all if you didn't want to.